Hey everyone, it's Julie here with TipRanks. Today we're taking a look at 5 strong buy dividend stocks for April. So let's get into it. Alright guys, welcome back. Thank you all so much for being here and happy April 1st. Today we're taking a look at 5 stocks that all have an ex-dividend date in April and also are rated a strong buy among analysts. Why do we care about that ex-dividend date? Well, that is the date that you must own a stock before in order to be eligible for their next dividend payment. So with these ex-dividend dates coming up soon within this next month, that means you don't have to wait a long time to start collecting that passive dividend income. So today we're going to take a look at these 5 stocks, what it is that they do, and of course what Wall Street is predicting for the stock's future. I found today's stocks using the TipRanks dividend calendar. This can be found in 2 ways, under the Tools menu under Calendar or under Dividends as well. With the Dividend Calendar, you can see a list of companies with their upcoming ex-dividend dates and different details like the analyst consensus and dividend amount and payout ratio. Just before we dive into our April dividend stocks, this is a reminder that if you enjoy the video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can follow along over on the TipRanks website or right on the TipRanks mobile app, which you can download by following links in the description down below. Now let's dive right into our 5 strong buy April dividend stocks. We're kicking things off with Hannon Armstrong Sustainable Infrastructure Incorporated, also known as HASI. They trade under the ticker HASI, currently priced just shy of $29 per share. In the past year, the stock has climbed about 13% overall. In the last 3 months, they're up just over 6%. HASI provides capital and services to the renewable energy and sustainable infrastructure markets within the United States. They provide capital and expertise to projects that reduce carbon emissions and promote sustainability. They act as a specialty finance company, funding initiatives like solar energy installations, wind farms, energy efficiency building upgrades, and other climate-positive infrastructure. HASI used to be a REIT or real estate investment trust where they had to pay out a certain amount of their income to shareholders. But they actually revoked that status back at the start of 2024 and are now just a normal corporation. The company does still boast an attractive dividend yield, however. With a current quarterly dividend of about 42 cents per share, their dividend yield comes in at 5.64%. Their ex-dividend date is April 4th for payment on April 18th. About a month ago, we did have a 5-star analyst from Wells Fargo initiate coverage on the HASI stock with a buy, saying that it offers investors a low-risk way to invest in the volatile renewable sector, and that they expect the stock's relative valuation to expand, driven by above-average earnings growth. They believe that HASI has a low-risk business model and offers investors a compelling way to invest in energy transition at reasonable valuations. And with 10 current analyst ratings, the HASI stock does come in as a unanimous strong buy, with an average price target of $37.60, implying an upside potential of about 30%. And looking at those ratings down below, all in the double-digit upside territory, with our low end being an upside of 14% and the high end being an upside of 45%. For our second dividend stock, we have Millicom International Cellular, doing business under the brand TIGO. Trading under the ticker TIGO, it has been a turnaround year for the company, gaining 54% in the past year and up 25% in the last 3 months, now trading just above $30 per share. They are a Luxembourg-based telecommunications and media company providing services to Latin America. Operating under the TIGO brand, they offer a range of digital services, including mobile data, voice, broadband internet, cable TV, and mobile financial services like TIGO Money. They have a strong presence in countries like Guatemala, Colombia, and Panama. The TIGO stock actually just reinstated its dividend after pausing it back in 2019, and this is a part of a new turnaround strategy that they introduced last year after a challenging period. They achieved a net profit of $268 million in 2024, reversing a $245 million loss from 2023, and saw a record equity-free cash flow of $650 million. Also part of the plan was reinstating their dividend and introducing a $150 million share buyback program. Their current quarterly dividend comes in at 75 cents per share for a yield just above 3%. Their ex-dividend date is on April 8th for a payment date of April 15th. Following their latest quarterly earnings report, we did hear from an analyst at Scotiabank who named the stock one of its top picks. Slightly increasing their price target on the stock, they said that TIGO remains the firm's top pick for 2025, going from burning cash in 2023 to guiding the sector's highest equity yield for 2025. With 5 current analyst ratings, the TIGO stock does come in as a strong buy with 4 buys and 1 hold. And analysts' average price target comes in at $34.58, implying an upside potential of 14%. Looking at those price targets down below, the low end is our hold rating with an upside of 5.8%, while our high end is that price target from Scotiabank with an upside of over 25%. Number 3 on our list of dividend stocks is Dime Community Bank. Trading under the ticker DCOM, they're currently priced at $27.75, having climbed 57% in the past year, though they have cooled off more recently and in the last 3 months are down almost 8%. As the name suggests, this is a community bank that has been serving the New York metropolitan area since 1864, now with 60 different branches. They provide a wide range of financial products and services tailored to local businesses, consumers, and municipalities, with both individual and business banking products available. Beyond traditional banking, they also offer title insurance through their subsidiary Bridge Abstract and financial planning consultations via their Dime Financial Services. Dime Community Bank boasts nearly 30 years of consecutive dividend payments, and their current quarterly dividend comes in at 25 cents per share for a yield of 3.62%. Their ex-dividend date is April 17th for payment on April 24th. Following some balance sheet repositioning at the start of the year, we had an analyst at Piper Sandler upgrade their rating on the stock. Following the company's quarterly report and guidance commentary, they raised their estimates considerably to account for the significant balance sheet restructuring completed in the fourth quarter. The firm believes a stronger outlook should drive the company's valuation up and create more upside to the stock. Piper Sandler is one of just 3 firms on Wall Street to have a rating on the stock, but all 3 do rate it a buy. And the average price target of $39.50 implies an upside potential of over 42%, which is pretty huge. Looking at those price targets down below, they range from an upside of 37% all the way up to 48%. Moving right along to our 4th dividend stock, we're taking a look at CVS Health. They trade under the ticker CVS, currently priced at $67.49. Now these guys are in the red overall in the past year, down 4%, but you can see recently they've made a massive comeback, and in the last 3 months are up over 54%. CVS Health operates over 9,000 retail pharmacies across the U.S., making it one of the largest pharmacy chains in the United States, providing prescription drugs, over-the-counter medications, general merchandise, and health services like vaccinations and chronic disease management. After hitting lows in 2024, the stock did see a big rebound. A few things behind that was the introduction of a new CEO, some cost-cutting strategies, and record pharmaceutical sales. While there are still some concerns surrounding Medicare Advantage and Medicaid challenges, the company did also see a significant turnaround in their Aetna business, seeing progress in stabilizing operations and financial discipline. One area where CVS has maintained its discipline is its dividend. They've been paying out since 1984 and have been fairly consistent with increasing the dividend as well, besides a few-year pause around 2018. Their current quarterly dividend comes in at 66.5 cents per share, for a dividend yield of 3.96% and an ex-dividend date of April 22nd for payment on May 1st. An analyst from Argus Research recently increased their price target on the stock, saying that they were encouraged by the steps new management is taking to manage costs and better align their health benefits segment member mix towards higher margin customers. And with 17 current buy ratings and just 2 holds, the CVS stock does come in as a strong buy. The average price target of $73 implies an upside potential of nearly 9%, and looking at some of those more recent ratings, we can see analysts boosting up those price targets north of $70, with a high end here of 81 for an upside of 20%, and our low end price target coming in at 5% upside. If you've made it all the way to our 5th stock today, then this is a reminder to make sure you've hit that thumbs up button. Last but not least, we're taking a look at NiSource. They trade under the ticker NI, currently priced at $40 per share, having climbed 51% in the past year, gaining over 11% in the last 3 months. NiSource is a regulated utility company providing natural gas and electric services across the U.S. Through their Columbia Gas and NIPSCO brands, they serve 3.3 million natural gas customers across 6 different states, with about 60,000 miles of pipeline and 500,000 electric customers in northern Indiana. They also invest heavily in modernizing its infrastructure to ensure safe, reliable, and affordable energy while transitioning to cleaner sources. And they are another company with a long track record of dividends, with consistent payments dating back to 1987. Their current quarterly dividend comes in at 28 cents per share for a dividend yield of 2.69%. Their ex-dividend date is at the end of the month on April 30th for payment on May 20th. Just last week, an analyst from Mizuho Securities bumped up their price target while reiterating a buy, saying that solid jurisdictions continue to underwrite earnings growth at the high end of NiSource's 6 to 8% target and balance sheet improvement. Indiana load growth related to data centers represent considerable upside. And with 9 current analyst ratings, we once again have a unanimous strong buy, with an average price target of $42.89, implying an upside potential of nearly 7%. Looking at those price targets down below, several analysts bumping up those price targets recently, ranging from 4.5% to nearly 12% upside. So there we have it, a quick look at 5 strong buy dividend stocks for the month of April. Let me know which of these jumped out the most at you or what other stocks are catching your eye lately. I always appreciate hearing from you guys. And of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always doing your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.